Private equity is a crazy industry. It's where you collect capital from people, you go and give it back to them, and then you ask for it again. But you have to return it and then ask. So the key is, to have a track record, but it's also to have good demonstrable management, not just in the private equity firm, but to show that in the underlying opportunities, there are people who can execute.
Do you see a $10 billion private equity fund in Africa?
The answer is
Okechukwu Okey Enelamah is the founder and executive chairman of African Capital Alliance, a pioneering investment firm with over $1.2 billion in assets under management. Under his leadership, ACA delivered landmark deals, including the legendary MTN Nigeria investment, one of the most successful private equity deals in African history.
MTN was capitalized with $400 million in Nigeria to start. $285 million to pay the license, $125 million basic, and then they put debt on that. MTN demonstrated that this thing of thinking that Nigeria is constrained, we need to look at it again, because when you apply the right conditions, you get the right results.
He's also served as Nigeria's Minister of Industry, Trade and Investment, driving billion-dollar industrial initiatives and shaping economic policy at the highest levels. You partnered with titans like the Kramer, Chief Ernest Shonakon, Pascal Dozier, and Mohammed to launch ACA. How does a young medical doctor turned Goldman Sachs banker convince these legends to back Nigeria's first major private equity fund? What was the shared vision that made this partnership work?
And if I had to give one answer to the how, I would say it's also about.
Okay. So when someone watches this episode, they're going to click in. They may be taking a walk. They may be getting up to do their workout in the morning, or maybe they had a long day and they see your face and they see the title of this episode and they click in. I want you to first just talk about overall the opportunities in Africa.
Opportunities in Africa. When I step back, let me start with a story.
Yes, please.
I lived in Africa growing up, and when I say Africa, I mean really Africa. I grew up first before the war years in Enugu. Then I had to move back to my hometown, Umuahia, during the war years, and we literally had to go around different parts of the East during that time. And then we moved back to Enugu. But then from Enugu, I went to a town or a village, town called Uwazie, which is where you have one of the famous sort of missionary schools called Methodist College, Uwazie. So in a sense, in fact, I grew up under a gum tree. I used to play draft under this gum tree. And it was from there I went to Government College, Umuahia, where I met Chika, Emole, for instance, who is Eche's dad. And I say that just to say that when you come from the ground up, you're really African. But I always had this dream and this desire, right, to experience the world in a global setting. So when I eventually had a chance, I left and I went to school abroad. I went to do my MBA at Harvard Business School. When I went there, and I want to link it back to your question about opportunities, and saw all the opportunities that the world provided, particularly in the world of finance, which is what I decided to do. At great cost, by the way, because I started life as a doctor, but I decided that finance was the thing. If you ask me why, I can't give you a rational reason even till today, but I do think there's such a thing as, having a passion for something or maybe even a calling. I felt called to finance. So anyway, I went there and did a bit of investment banking, but there was a pull to Africa, and I have no regrets, despite the ups and downs. And that pull was about, the fact that Africa was still undiscovered, and I love the idea that you can do in Africa what has been done elsewhere and do it well in Africa without cutting corners. So for me, the idea was like this world of finance that was exploding in Asia at the time. Why can't it explode in Africa? So I zeroed into finance and I came back specifically to do finance in Africa. I did start with South Africa though, because South Africa was more mature, more ready, so we first brought US capital to South Africa under Nelson Mandela's time, or during Nelson Mandela's time, 1994, 95, 96. But that then opened up the world to Africa and opened Africa to the world. And then the next stop, of course, was Nigeria. And then we've just been trying to show that Africa can be, a great place to invest with all the ups and downs. And I'll be happy to talk more about that. So I talk about finance, but as you know, when you get into other fields, the creative world, for instance, Africa has exploded. I was talking to a friend just yesterday. The daughter is in LA, and he says Nigerians keep coming up. I was talking to another friend who went to a wedding And he said it was a Nigerian wedding. And wow, the Nigerians know how to wed.
That's very true. And, thank you, because you opened up many questions I have in my mind. So first I want to go into, you went to Harvard, right? And it's a top school. I'm curious, at that time, were they talking about Africa as even an option, right? Or did you have to kind of talk to friends or talk to professors to kind of figure out that, yes, I moved away from Nigeria and I'm here in Boston studying, but I still want to go back?
It's a great question because to put things in perspective, because these things happen in seasons, right? My season was early 90s. So I went there 92 to 94. At that time, Asia was hot. In fact, Japan specifically was hot. Africa less so. But what tends to happen in places like that, there's a great African proverb that says you cannot be taller than me and shorter than me at the same time. What I found was that there was a lot of pressure, right, to sort of do what everybody else is doing. But I took a course that was given by a lady, a black American lady called Professor Linda Hill. She's one of the top professors that Harvard Business School has produced now. She used to teach a course called Power and Influence. And she got us to write a paper on what does success mean to you. 10 years today, 20 years today, 30 years today. And she told us to dream. And my dream was I wanted to, come back to Africa, build a great business, hopefully in the world of finance, and give back to society and be part of an African success story. I said this because it was difficult to do at the time. Because even Goldman Sachs, which is a US investment bank, a global investment bank, but out of the US, where I did my summer associate program, which is what you used to do in between the 2 years in business school in New York and in London, didn't really have much of an African offering. They had something they call private client services, which is basically private wealth management, which included Africa, but that was about it. And so it was a struggle, to find a way to play in Africa. But that is where the opportunity to be creative comes in, for entrepreneurship comes in. So for me, because the way the classes are running at Harvard Business School is that there's a lot of interaction. They call it the case method. You guys discuss cases. Bringing the Africa perspective was actually one of the reasons. I did very well in the program, by the way, but it's because I brought a unique perspective, because they respect something that is additional, something that adds to the conversation. And I'll give you one small example before I conclude. We talked about the energy crisis of the 70s as one of the courses where, because you deal with macro, micro, everything there. It's a great school in terms of just teaching people about business and how to think about business problems. So the problem was with the oil prices skyrocketing, as some of you may know, in the 70s because of the wars that were being fought then, you will recall that it was in the 70s that most of the infrastructure in Nigeria, that infrastructure was built because we had an oil boom in question, or in quotes. So when they were talking about this oil shock and crisis of the 70s, and I raised my hand and said, it's interesting you guys call it a shock. We called it a boom because that was what built our infrastructure.
Yes.
They were like, wow. So one man's shock is another man's boom. So they like that kind of perspective. So it's my own way of saying that, yes, Africa came into the conversation, but it was almost from a contrarian sort of why not Africa? Yes.
And then when you now say, we were able to bring capital into South Africa, tell me, how did that even happen? Especially if it wasn't typically done.
Yeah. Again, the way it happened was just, at least from my perspective, was very, very fortunate. So what had happened is that, having decided I wanted to be in Africa, there weren't many opportunities. Fortunately, I knew the dean of the school because they were actually trying to, I don't know if I'll say persuade me or ask me to join the faculty program, because I had done very well in the finance course. I won the finance award that year. And they typically would encourage you to consider academia as a field, right? When you do that well. So I got to know him a bit. Fortunately, he also knew a gentleman who was running the family office of the Rockefeller family. The Rockefeller family, a very prominent US family. Mm-hmm. That gentleman, Thomas Barry, who eventually became a partner of mine, was monitoring what was happening in South Africa, because President Nelson Mandela had just become president in, about May 1994 or so, April-May 1994. So because of what had happened during the apartheid era, where US pulled back, during the sanctions against the apartheid regime, they pulled back. He thought there was an opportunity for them to return now that you had a legitimate government in South Africa and that there were opportunities opening up because the economy was being restructured, given all the, new forces at work. So he thought there was a private equity play there, private capital play there, where you could bring capital to support businesses that wanted to grow or go to the rest of the continent, because again, South Africa was more accepted and so on and so forth. Because of his credibility, he wanted to do it, but he decided to basically find an African, just to support him in that. And the dean recommended me to him. So it was on the basis of that, right, that he then, because he had the relationships, having been in the market, he also went to Harvard Business School, by the way, 20 years earlier before I did. So we basically marketed South Africa first to the US institutional investor community. And then we raised about $150 million.
Wow.
Yes.
And I'm curious, as a Nigerian entering South Africa, how was that? How did they look at you?
Great question. I thought, being Black African, that it would be an easy one, but it wasn't. So when I got there, two things surprised me, or came as, a bit of a challenge for me. One was that, for the white community, they weren't used to sort of seeing, Black professionals, right, who had gone to elite schools, coming to participate in the economy, even to the point of coming as leaders, right? So you had to get used to that, and they had to get used to you. And that took some adapting, but I would say we found our way around it. For the Black South African, it was also mixed. There was a concern by some of them, as you have seen, and it's become more so, that are the Black Africans trying to crowd out, the Black South Africans, right? And I saw some of that. I tried to signal that, for me personally, that I wasn't there to stay. I was there for a season. In fact, interestingly, that's what created the African Capital Alliance opportunity. Because at some point, I had to make good on my claim that I was there temporarily by beginning to inquire, can't we even do what we did in South Africa, in Nigeria and the rest of Africa? Even though we had General Abacha as the president of Nigeria at the time. And, as God will have it, it actually opened an opportunity. And eventually, in 1998, I then packed my bag with my wife, and one daughter. We had a daughter at the time, and we moved back to Lagos.
Uncle, let's start with the origin story of ACA, right?
Mm-hmm.
You partnered with titans like Dick Kramer, Chief Ernest Shonakon, Pascal Dozier, and Mohammed to launch ACA during military rule under President Sani Abacha. How does a young medical doctor turned Goldman Sachs banker convince these legends to back Nigeria's first major private equity fund? What was the shared vision that made this partnership work?
Excellent question. I'll start with the how. And if I had to give one answer to the how, I would say it's about relationships. It's also about partnerships. It's also about mentoring. So my mentor was my boss in Arthur Andersen. When I left the world of medicine, which I trained in university, I went to the same university with Chika. Chika was a lawyer, trained as a lawyer. I trained as that's your dad, Eche's dad.
Yeah.
I trained as a medical doctor. And we were all very young and thought, the world would be very rosy, but everyone had to figure out what to do after school. Yeah. And I figured out that, medicine was not what I really wanted to do after school. So I was fortunate to land in Arthur Andersen, which is, it's no more. Arthur Andersen today is represented by KPMG Professional Services in Nigeria and West Africa. But back then, it was one of the leading accounting firms from the US, but it was caught in the Enron scandal. Yes. And that was what led to his demise. Mm-hmm. But I joined them in 1988 and spent, 4 good years or about 4 good years there. And I got a mentor in the managing partner of the firm called Dick Kramer. Richard L. Kramer, or Dick Kramer for short, an American who came to set up Arthur Andersen in 1978 in Nigeria and really mentored a lot of Nigerians. He's a great man. I have a lot of respect for him. He's no longer, he passed away in 2022. But he was the one that I I approached him to say I wanted to go to Harvard Business School because he had gone to Harvard Business School. And, it took some convincing, but eventually he agreed to mentor me and also to provide a reference for my Harvard Business School application. And then I stayed close to him. When I was living in South Africa, having attracted the capital from the US to South Africa, Dick, who, was very patriotic in quotes, a lover of Nigeria really, wanted to know how were we able to do it? And could it be done for Nigeria? Initially, when he asked me, because he came to visit me in South Africa or in Johannesburg, I was surprised. I said, Dick, it will be tough with a military leadership or military dictatorship in place. How do you convince people to bring in capital? Nigeria was almost like a pariah nation. But the relation with him was sticky, which is why I talked about relationships and mentoring. So when I came back to Nigeria in 1996, I actually came to get married. But I then visited with him again. And we talked to him more about what would it take actually to attract capital to the private sector, to build, the private sector in Nigeria, given that the government itself was having issues politically. And it was at that point that Kramer invited me with my partner that I mentioned earlier, Thomas Barry, who I had worked with in South Africa to attract the US capital, to visit. So we came in April 1997. When we came to visit, he then invited Chief Ernest Shonekan, Pascal Dozier, and Malam Mohammed Hayatuddin, who were already people he was sort of close to. They were, in fact, part of what was called Vision 2010 at the time, which was a visioning process for a new Nigeria, in quotes, post. We can say post now. I don't know if at the time they were thinking post Abacha, but definitely, post-military, because this was in 1996, 1997. So it was in that context that I met with them, with my partner. And talking about people again, we struck, a bond together. We got along very well. And we said, yes, the environment is difficult, but why don't we at least begin to envision what it might look like to attract capital to Nigeria? And the obvious first step was to look at the capital that was already in Nigeria, whether it was trapped, like the pension funds of some of the companies, or for whatever reason was already here. And that's where we started from in 1997, 1998.
Okay. Let's talk about the legendary MTN deal, right? 47x return on Fund 1, potentially the greatest PE investment in African history. But we want the real mechanics, right? At the time, you projected 400,000 lines max. MTN hit 12 million subscribers. That's a 30x variance from your models. When did you realize that this wasn't just good telecom exposure, but generational wealth creation?
MTN is a great story on all fronts, right? Yeah. It was, I think it was more like 44x, but very close to your numbers. I'll say a couple of things. One was that the investment thesis of the firm, of African Capital Alliance, was that it was possible with deregulation for the private sector to do very well in Nigeria and the rest of Africa. That deregulation and allowing private sector participation in the key parts of the economy, in the key sectors of the economy, was absolutely essential if we were going to sort of achieve our dreams, our economic potential, both as a country, Nigeria, and as a continent, Africa. And telecoms was probably one of the best demonstrations of that. Now, when under President Obasanjo, I think it was 2003 or so, he decided to deregulate the telecoms sector by awarding what they call digital mobile licenses. We saw the opportunity. In fact, our first step was to work with Mo Ibrahim. Mo Ibrahim is a legend in Africa. He owned a company called Celtel that had been successful in other markets. So we went and persuaded him. No, let me take that back. I have to be more accurate. He was interested in Nigeria as well, but wasn't sure how to play it. In fact, there was a gentleman called David Isom. I remember his name. His father used to be an ambassador, a US ambassador to Nigeria. David Isom was working for him. He had sent David to come and explore the opportunity in Nigeria. So we went back with David to go and see him to say, partner with African Capital Alliance and we'll do it. He actually did bid for the license, but based on their models, and I'm getting to your numbers, they stopped at 250 million. The model, because it was an auction for the licenses, the 3 available licenses, they reserved one for NITEL or the government utility. And so they had to bid till there were only 3 left. So at 250 million, Celtel dropped out, but they cleared at 285 million. The licenses were eventually sold for $285 million US each. Fortunately for us, Pascal Dozier was part of the group of people, MTN. MTN decided to use a different strategy. Celtel partnered with us. MTN partnered with prominent Nigerians. They selected prominent Nigerians from each, should I say, geopolitical zone or, major language group or tribe or part of Nigeria. And so, they had Northerners, they had Southwesterners, and they had Southeasterners and South, and so on. So Pascal, like I told you, was already a partner of African Capital Alliance, and they needed to organize themselves, because the bottom line is MTN as a corporate knew what it was going to do. It was supposed to be a 60-40 relationship between MTN and the local investors. And so Pascal Dozier and ourselves were comparing notes. We were doing CellTel, he was doing MTN. Once we dropped out, we then agreed that it was better to combine forces because the amount of capital required was a lot. And so we then proposed to the Nigerian investor group that let's provide the institutional backing and the investment banking, investment advisory support they would need, both to raise the capital, because capital was going to be tens of millions of dollars at a minimum, So we played a critical role in mobilizing the local investor group and in partnering with MTN to show them basically the lay of the land and how to walk through Nigeria. And MTN itself ultimately turned out to be a great partner. So the final 2 points I'll make on that is that one, it wasn't the only example, by the way. We also partnered with a company called Grace Security Services out of South Africa to provide security and asset protection to the oil companies, including Chevron, where Chika and Emole worked, and some other companies. And that company also was a 40x return. So the idea is that, if you spot those opportunities where you can bring in something that really adds value and do it with the efficiency and the discipline and the professionalism of the private sector, you can always do well, not just in Nigeria and Africa, but that same thing. If you go and look at the Asia story, it's the same model. So it was a well-tested model. And then the final point is your point about on what I call potential, right? Unrealized potential or unmet potential. MTN clearly demonstrated, in fact, I would say the whole digital mobile licenses demonstrated that there was clearly a lot of potential there. And that this thing of thinking that Nigeria is constrained, we need to look at it again, because when you apply the right conditions, you get the right results. And that's what we saw with them.
What did it look like in your alumni network at the time? Because you had obviously made a contrarian bet, right? Most people were looking at Asia. Most people were looking at maybe other emerging markets. Nobody necessarily thought Nigeria could maybe work at the time. What was the response from your alumni network, the other private equity groups around the world who might not have been paying attention to Nigeria at the time? What was that response in from that network of people?
I think what you would find is that people sort of look at Nigeria and doing stuff in Nigeria and in Africa romantically. I use the word romantically to mean, in their head, right? The way, dreaming, but not doing, right? I remember when we landed in South Africa, I remember one of my partner, my mentor partner, Thomas Barry he said, okay, we actually came. Everybody's talking about Mandela, everybody's talking about South Africa, but to get on the plane and show up, that's a different ballgame. So the first thing I always tell people is that you have to show up. Showing up is key, right? So I voted with my feet. I showed up. Yes, I did it in a staged way. I didn't do it hook, line, and sinker. I didn't jump on the plane and arrive in Nigeria. I went to South Africa first, which you could argue at the time was, an easier bet with Mandela there. And then that worked. Then I took the next step. But it was always anchored by the relationships. I tell people, nurture your relationships, because for a lot of young people, it's very important that you also have people who are like mentors, right? Because if I look at my story, mentors have had everything to do with it.
In terms of even before MTN, right? I think one of the first companies ACA was also involved in was ABC Transport.
Yeah.
And I think it makes me think about what you said about showing up, but in ABC Transport, you're not just showing up, you're actually on the ground, right?
Yes.
And this is a transportation business. Can you tell us a story about that, how that evolved for ABC Transport as well?
Great story. Of course, when you think ABC Transport, only one name comes to mind, Frank Eneji. Frank Eneji is, if you haven't met him, you need to meet him. I hope he's still active. We haven't spoken in a while, but he's a great entrepreneur. Frank was in UNN with us, University of Nigeria, Nsukka. In fact, if I recall, he was maybe even the director of transport. The way people have this passion for things. The way you have student union sort of governments, right? Some people do different things. I think he may have been that. But he spotted the opportunity that you can provide air-conditioned buses, luxury transport, right, on road, so that it was an alternative to air travel, but do it just in a very good way, right? Provide good service, professional service. So people don't feel like you have to be dealing with touts if you have to go by road. So, because there wasn't sufficient air transport, frankly. And in any event, road transport is always a complement, maybe not a substitute. Anyway, so he started ABC Transport, but obviously it was capital constrained. But he also had a vision that he wanted his company listed. It was one of those people that felt going public was a badge of honor and a real sort of milestone. And he needed somebody to work with on that. So we were introduced to him by common friends. Like I said, we had a lot of friends in common. And what impressed me about him was when we gave him the strategy, not only to bring in capital, but to improve the governance, strengthen the governance, he welcomed it. I remember sitting down with him at our, sort of our boardroom. We're negotiating what we call the shareholders agreement, which where you negotiate the rights and responsibilities once you put in capital. Because as you know, in a private equity setting or private capital context, you are governed by the legal agreements that you enter, and everything needs to be spelled out as important, so that way there are no surprises. So one of the things we had to deal with was what happens if the business is not performing, and we had to change management because Frank was the CEO. And we said we might have to replace the CEO. And, Frank really impressed me. He stood there, looked at us without any emotion. Most of the Nigerian entrepreneurs, when you get to that, they say, you want to take over my company? They get very upset. They might even walk out of the meeting. Frank stood there and said, okay, let's discuss what your expectations are. Let's write them down. Let's agree on it. And we went through that process and it was all in the agreement. And not surprisingly, I'm not surprised to say that like Frank, matched us toe for toe. I mean, we literally went on that journey together till we listed the company and we exited, and we got, we didn't get 40 something else, but we got, I think, close to 3x, but over a 3-4 year period. And it was a great return, but the experience was even better. So I consider the ABC Transport story, a good example of how private equity play should happen, when it's done well.
For a lot of our viewers who want to get some insight into how private equity works, can we walk us through the raising process, and not from Fund 1, Fund 2, Fund 3, Fund 4? And I think Fund 1 was about 35 million. I think by Fund 4 is about 570 million. Right now, $1.2 billion under assets under management, if I'm not correct. Can you walk us through the process of, hey, I've proven myself with Fund 1, then I go back to LPs, they double down, and then going from there, how does that work in the private equity space?
I think you actually have summarized it very well. Yeah. I think you must be a knowledge expert. When you talk about these things, it sounds like you've done either a lot of research or you've done it, experienced it yourself.
We do a lot of research for this.
I think the key is that point you made, that you prove yourself and you come back. Yeah. Somebody once said, one of the titans of the industry from the US once said that private equity is a crazy industry. It's where you collect capital from people, you go and give it back to them, and then you ask for it again. But you have to return it and then ask, right? We were very fortunate because we got off to a great start. Like you said, we had a return that was like over 40x. Yeah. And that will launch a business anywhere. You know what I mean? So not surprisingly, the fund then moved from 35 to 100 million. Because everybody, if you look at it, if you got people that return, they're only giving you a fraction of what you return to them. And then the momentum continued because we went from there to 400 million. And then it slowed a bit to, just under 570 million. But the last 10 years, I must say, have been tougher. But the good news is that, we're seeing green shoots again. Things are looking up again. We're now trying to raise about 750 million. Okay. So the key is, to have a track record. The magic, should I say, phrase or term in private equity is track record. But it's also to have good demonstrable management, not just in the private equity firm, but to show that in the underlying opportunities, there are people who can execute, right? It's also to have an investor group or investors who are interested. It's very hard to persuade somebody to do something they're not interested in. People, that's why we are all, what you're doing is great, by the way, because you have to get people interested in Africa. If they don't want to do Africa, it's a higher hurdle. If you have to persuade them to do Africa, then persuade them to do private capital, then persuade them to do venture capital or private equity, then persuade them to back you. These are all decision points. Do I do Africa? If the guy is not doing Africa, then they can't do you, right? Then next is, am I going to do VC or am I doing private equity and so on? So all those things are important. The good news though, is that like, Africa is increasingly on the radar. Slower than we thought. 10, 15 years ago, the economists did this Africa Rising thing. We thought Africa was about to explode, but these things always go through cycles. You know what I mean? I would actually argue that the down cycle we faced over the last 10 years has made us more resilient, more anti-fragile or anti-fragile, and in many respects, more able to have a better future. So I think the prognosis is quite good.
So for a lot of our viewers and even a lot of the entrepreneurs and founders who watch the show, in the last maybe 10 years, there's been an explosion in the venture capital industry on the continent. And I think a lot of founders now think when they're looking for funding, a venture capital model first before even private equity. Can you break down to our viewers the differences and in mechanics between private equity and venture capital?
Great question, Eche. I think let me give 3 or so fundamentals just to make it easy to understand. The first thing to think about is the growth cycle of a business. A business starts off as an entrepreneur. Most people say I started in my garage in the US and other places, maybe same here. And usually at that stage, they're backed by the 3 famous Fs: family, friends, and fools. And they use fools to mean that like, it's almost like, you can believe anything, right? Yeah, but it doesn't necessarily mean that they're fools in the true sense. It just means that like, they're making a bet, And then once the company gets started, it starts to go through that, venture capital series, right? The early stage financing. Eventually, it gets to Series A, Series B, Series C, after it's gone through, the proving stage. Now, all that is part of the venture capital cycle, and it is essential. That's where businesses come from. It doesn't mean that every business receives professional capital, but all businesses start from somewhere, and that space requires its own set of competencies, right? Typically, you find that people tend to be more sector specific there because they tend to almost like nurture. It's almost like you create a womb in which something is birthed. People tend to look for winners, and in order to find the winners, are prepared to back, things that have a high potential, So it's not unusual to see in a venture capital fund that they might invest in 10 things that might be one unicorn or one star, like that does almost like MTN or whatever, and 2 or 3 or 4 or 5 so, and maybe up to 5 or more that may even lose the capital or lose money for sure, and that's considered normal and is okay. Now, when you come to private equity, typically, we deal with growth capital. That means that the business has gone through those cycles and is now at the stage when it's growing rapidly. It needs more capital to get to scale. And typically when it gets to scale, it will either get acquired, do a listing, or maybe merge, or maybe, do some financial engineering, management buyout, leverage buyout, you name it. So we like to think of ourselves as in that private equity space. There's also a stage beyond that, which you see a lot in the US, which is what I talked about, management buyouts and leverage buyouts, where you take control of companies and just use debt, to sort of take out the owners to create liquidity for people who want to go. And then the business is usually able to repay the debt. And then that's how you make money. Once you repay the debt, the company is yours. So yeah, so we are more in that middle sort of like growth capital phase. But having said that, we talked about MTN. You could argue that MTN is neither a startup nor growth capital in the sense that like, it's what we call a multinational partner. These companies were already successful in other parts of the world, came to our market. We're going to create a business of scale. MTN was capitalized with $400 million in Nigeria to start, right? $285 million to pay the license, $125 million basic equity, and then they put debt on that. So it was already a big company to start, right? And we were sort of fortunate to be some of the early partners. But I would say that like all these are great places to be in. It's horses for courses. People master some areas. One of my best friends, Dr. Omobola Johnson, who used to be the Minister of Technology, we floated a university together, STEM University, NUTM, and, she's in the venture space, but she's very competent in what she does. We're in the private equity space, and I like to think we're also very competent at what we do. Yes.
And I also want to talk about, because now you're saying you're starting to see some light as far as some opportunities. What spaces are you interested in? Because I feel like for so long, if we talk about Nigeria, it's been oil. And I read a report recently that said for the first time, the digital economy is surpassing oil GDP. So are there areas or maybe it's digital economy that you guys are interested in now?
Absolutely. And, so let me start with Nigeria, then I can broaden into the continent. So for Nigeria, it is true that oil has provided the foreign exchange, right? Just because of the, but it's selling commodities. But as a percent of GDP is actually sub 10%, as you know. Whereas digital has just been growing. And the way to think about digital is what I call the technology ecosystem, the tech ecosystem, in which case you have to think about digital infrastructure, the whole data centers, connectivity. We invested in a company called Wayok, which owns one of the big data centers in Nigeria and data centers across Africa. But you also have to think in terms of basically companies that, are tech companies, fintech, agri-tech, edu-tech, you name it. Then you have to think about companies that are being transformed by technology. So these are your traditional businesses, but now leveraging technology. I did a great case study recently on Domino's, the pizza company. Domino's, earns returns almost like the so-called tech companies in the US, all these bulge bracket tech companies.
Really?
Yeah, because it's all tech driven. I mean, they've so used tech that, I think the P is like 40, 50x. Yeah, Domino's, as a company, it's been growing on steroids. And the reason is technology. So it's a classic example of a traditional business that leverage technology to deliver, just in terms of scale, and that scale has just, it's been growing and growing and growing just because of technology. So if you think about technology that way, then it's pervasive, it's everywhere, right? And you are right that that's something Nigerians and the youth in particular are doing well. And this is just the start, right? So I'm not surprised that it's becoming a big part of the GDP. It's going to be double digits already very soon. That's why they're rebasing and doing all these things. The other point to make is that it's also something that travels well, right? So it's a point of connection with the rest of the world. So you find that the tech industry here is sort of connected to the tech industry, say in the US, Silicon Valley. When I was a minister, we actually took a tour, and there, Nigerians were there everywhere you go. But the same thing is happening in other parts of Africa, in East Africa, in South Africa, but I like the fact that Nigeria is quite competitive and Nigeria is firstly tier one when it comes to tech.
And actually, I'm also curious, are there other businesses from a private equity level in the US that you feel like should come into Nigeria? Like, for example, with Domino's, one question I've had is, why hasn't McDonald's entered Nigeria? I don't know, maybe we don't have the appetite for it, but I also think about another business. I'm trying to remember the group name, but they brought in Adidas to Nigeria, right? And apparently they're doing very well. Yeah. And I didn't realize people are buying sport gear and sneakers and things like that, but they're saying yes. So I'm curious, is there other? No,
it's a great question. Let me use your example. McDonald's is a great example. I happen to know about that. When I was in South Africa, McDonald's came to South Africa. It was actually led by a Nigerian. I remember his first name, Dr. Alfred.
Really?
He eventually went into pharma, but he lived in South Africa when I lived there. Dr. Alfred, I can send you his surname later. But he was, one of these guys that had a PhD, smart guy. He was the head of McDonald's in South Africa. And they rolled out. The key is infrastructure. There's a minimum level of infrastructure in terms of the cold chain, all those things that McDonald's has to see to come into any market. And because the standard has to be the same all over the world. And it's the same with the others. But I think you are right that once you pay attention to Nigeria, you can do it. Burger King, obviously has looked and is sort of dipping his toe. Domino's has done it successfully. So my sense is that McDonald's will definitely come. It's just a matter of time. They wanted to come in a big way at the time because I know Dr. Alfred wanted to bring them here. They wanted somebody to invest tens of millions of dollars to set up that infrastructure. Obviously somebody has to be willing to make that investment for them to come.
Okay. And is there other companies in the US that you think would be interesting that would do well in Nigeria? I
think the way to think about it is that almost every sector, right, that has been proven in other markets, not just the US, right, that where there is a gap here, potentially can do well here. Yeah. I use the word potentially because one is timing. Like they say, 90% of wisdom is timing. Telecoms was 2003, 2004. Great. The general principle is that infrastructure tends to precede offerings, right? So if that thing requires some kind of infrastructure or things to operate with, we need to put that in. And that could be a good investment. or it may require some government support, right? I'll give you an example. Things that require great logistics in terms of roads, and all those things, clearly the more of that is put in place, the easier it is for them to come and flow on that. I have a friend, for instance, now who is doing a big railway thing, private sector railway, bulk goods, carriage and logistics. And he's working with US partners, right? That's an example. So I think you can apply it to, tech. You can apply it to financial services. I have a friend who is trying to do in Africa what happens in the US and this is a tech play where basically for companies that supply to big corporations, they normally have to be paid, after a while, 30 days, 60 days, 90 days. There's a company that is trying to provide some kind of technology in the center, and that technology enables those companies to be paid immediately, almost like discount, they just, for a small discount, get your money. They then collect when it comes. So it's almost like a banking service or a financial service. But in the US, it's a big thing, right? But in Africa, they're just trying to put it in place. And this thing is, it's a money spinner because once you do it and, it leverages technology, but it can be done to great scale. And I know somebody who is now bringing it to Nigeria and the rest of Africa. And the list goes on, yes.
And I actually have a question around your book, The Apostles of Righteousness in the Marketplace, which integrates Christian faith with wealth creation. I'm curious, with that foundation, right? Have you ever had to walk away from a deal that was just in your spirit, not morally right?
Absolutely. So let's start with the book. I told a story because I want to deal with that question on 3 levels: individual level, corporate level, and then government, because I've experienced this at all 3 levels. In that book, I told a story. I live in, the sort of banana estate, which is a suburb in Lagos, in Ikoyi, Lagos, and in that suburb, when it was actually a real estate development play for me. I was one of the early people who bought land when they sold the land, there, 20, 30 years ago. So in thinking of developing it, being an investor, I didn't think of it as just a house. I thought of it. So we developed a block of flats, and this was when you had the real estate boom around 2008, 2009. That's when we actually moved to Banana. But by the time we finished, if you follow the real estate market here, that thing was already going soft. So by the time we're trying to let it out, it was going to be soft. But a corporate came to take our apartments. But the person who was acting as an agent insisted on my paying a kickback to the accountants in the corporate, right? Just so they can process my payment. Given my Christian values and, my values really, I should say, even personal values, I thought that was a no-no. But it didn't stop there. Things slowed down. It was later I discovered that those people basically wrote almost like a letter in my name to say I withdrew my property because they didn't want to let out, they didn't want to take property from somebody who can give them something. So I'm sure they went and found something else to satisfy the needs of that client, even though the client wanted it. So you do pay a price at times for doing what is right. Similarly, in Capital Alliance, when we started, we actually said we don't do business with government. That's not to say government is always corrupt, but we generally like businesses that are private sector oriented, where the leverage is with us if we're doing something, not the one where somebody can withhold what you need to do your business and say, unless you do something else. We also choose our partners very carefully. Frank Eche of ABC Transport, we talked about it as an example, is very ethical. The partners that built ACA is another example. These were all ethical people. And you can do business ethically in Nigeria. When I was a minister, somebody once came to me, and this person had actually been a minister before, wanted to get one of the licenses that came, special economic zone license, because I was in charge of special economic zones as an industry minister. And actually had a good application. That's the interesting thing. And I looked at it and said, fine, we'll process it. But this person was anxious. He didn't believe it. He felt it's not possible for somebody to. So he wanted to, give me an envelope with, words of notes. And I said to him, that's not necessary. You don't need to do that, right? In any event, if you do that and you compromise me, how do you expect me to feel? Now I'm doing the work because I've been bribed as opposed to because it's right. He said, no, he's been a minister. He knows how difficult it is. Please, I should indulge him and accept it. Then I said something to him. And then he became apologetic. I said to him, because I also minister, I'm a minister of the gospel in church. I said to him, when I was coming to Abuja as a minister, God said to me, because God speaks to my heart, God said to me, okay, I have blessed you. if you need anything when you go there, come and ask me. Don't ask them. You know, and I remember, you know, the Spirit of God led me to a story in the Bible, the story of David. I don't know if you know the story of David and Bathsheba. David was a king. I mean, one of the greatest kings of Israel, as you know, married, lots of wives. But, you know, unfortunately, you know, fell into sin because he saw a beautiful woman and lured her to his bed. But when God rebuked David, he said to him, you know, he told him a story that a man, you know, had these animals and somebody came to visit him, could have used one of his animals as a sacrifice to feed the man. But his neighbor had only one. He went and took the neighbor's animal and sacrificed the neighbor's animal to feed his guest. And David said, this man must die. He's a wicked man. You left all your animals, you went to take somebody else's own. They said, you are the one. You have all these wives. You refused to look at them. You went for somebody else's wife. You know, but God forgave him. But eventually it was very costly. It was a very costly mistake for him, as you know. So in effect, that story that like you have so much, because I already was successful. Remember all these MTN deals had happened. So I didn't go to government at the time when I was struggling. I actually was at the peak of my career. I was CEO of African Capital Alliance, was a successful firm. So I believe that God let me go there to show that it is possible, first to serve your country and to do it with integrity and to do it where you're making a contribution. And I'm happy to say that, by the way, in that cabinet, I complimented them, right? Because some were politicians, some were soldiers like the president, but some of us were from the private sector, like myself, Senator Udoma, the vice president, Professor Shibajo, and we brought what we could, right? And it was a good cabinet in that sense. Of course, you still have to deal with Abuja and all the challenges of governance in a political setting.
But what made you write that book? Like, because you were just talking about us earlier about these, you know, you wake up in the morning, you walk, you pray. So was it during those moments where like just a message downloaded to you and said, I need to write this book?
It was partly an inspiration, yes, but it was also, I wrote it at the time when I was turning 50. This was in 2014. And I felt it would be good to, you know, sort of share my testimony, as we like to call it in church, right? Just to tell people my story. And the burden I carried then, which I carry now, is that I want to see people do things right in our environment. This myth that you cannot do things properly. I mean, look at the stories you are telling. These are success stories to show that there's, you know, we can actually dominate our world. You know, but the thing is that people tend to be lukewarm. People tend to, you know, be fearful and are easily discouraged. The key is what I call delayed gratification. You must be willing to put in the price, put in the effort, sow the seed, right? And wait for the harvest. When you do that, water doesn't run uphill in Nigeria or in Africa. You get the results.
I love it.
That's a quotable.
Uncle, so ACA evolved from a $35 million fund to about $570 million across 4 funds, right? But the brutal math by Fund 4, the average deal size had to be about $40 million plus just to deploy capital efficiently. And this is something that I know a lot of like entrepreneurs and founders don't do the fund math for a fund, where I'm pretty sure somebody can walk up to you on the street and say, Uncle, you're an investor, please give me money. And you're like, okay, at what valuation are you raising? We only write maybe $40 million plus checks. You're not going to be able to absorb this capital efficiently. At the same time too, you were literally competing with public markets for assets. How do you solve the fundamental equation of deploying hundreds of millions in markets where $50 million deals are rare?
You know, the amazing thing about this question, Eche, I literally came from a meeting with one of my investors, and this was his question. So let me give you the answer I gave him, and then we can decide whether that is sufficient for this audience or that is meant for the LP, as we call them, limited partner, which means a sophisticated investor or somebody else. So what I said to him, first of all, the experience curve is very important. Remember that like we have, you know, we didn't just jump into $40 million deals. We did $1 to $5 million deals, or you can say $1 to $10 million deals. Then we did, you know, $5 to $50 million deals. And then, and by the way, as we're moving up that food chain, we are creating space for others, because the key is that like, remember other players are coming in. So this is not something, it's not a monopoly. And you certainly don't want to be the only, you know, game in town or whatever. You know, so I think the first point to make is that like, because we've had long experience in the market, 27 years in Nigeria, if I include South Africa, then it's over 30, right? We know the players, and there are people who need tens of millions of dollars, and there are people, the quantity is more, it's like a pyramid. There are fewer who need 40 or 50 million, but are still in the tens, not the units, right? Whereas they are in the thousands across Africa that need $1 to $5 million. So that's the first point that, because of our experience. The second thing is what you talked about earlier, our specialization and where are the opportunities. So if you look at the tech space, because I told you it's an ecosystem, we invested over $80 million in Wyok. Wyok is one of the leading connectivity companies in Africa, as well as digital data center companies in Africa. And even then they're looking for $200 million now, right? Because they keep growing and growing and growing, right? MTN even back then, right, was looking for basically $160 million, 40% of $400 million, $160 million from the local investors. I wish we had it, because then, would have been billionaires, not, made tens of millions, but hundreds of billions. So the point I'm trying to make is that there are sectors that require scale. We talked about the energy sector. In the energy sector, the deal sizes are in the tens of millions. A friend is coming to see me tomorrow. He's trying to do a deal in the energy sector, an integrated energy company type of thing. He needs $50 to $100 million, right? So it's horses for courses. You need certain sectors where you need that capital. Also, what you find, just like in the US and other developed markets, right? You have the buyout firms or the big firms like the KKRs, the Blackstones, and so on. And then you have the venture firms and you have everything in between. Yeah. We're not saying the numbers will be the same, but you do need representation in terms of otherwise the market will get stuck, right? When somebody needs $50 million, what do they do? So I think we have a role to play as a market leader, as a pioneer. You are right that the final comment I was going to make is that you have to be more co-creative and proactive there. Meaning that they're not passive opportunities, you create them, right? You look at a sector, you look at where it's going, and then you partner with people. You also partner with the investors. So for instance, we've been engaging the local pension funds and the international investors as well, just to describe what Africa needs and to shape the environment. And we also partner with the regulators. So it's at some level, it requires leadership, it requires responsibility. And frankly, it's a role I'm comfortable playing. And I believe that God willing is giving me the experience and the background to do that.
Yeah. In the last 10 years or in the last decade, you've had companies like Flutterwave, Paystack in the tech ecosystem either raise funding. Some of them have become unicorns. I know at their early stages, I think some of them did approach you for capital, but maybe their valuations were so low. I know there are firms in the US who have tried to play on both sides of the market, where it's public markets and also private markets like Core2 and Tiger Global, right? Did ACA at some point say, maybe we're missing out on opportunities like a Flutterwave or a Paystack? Maybe we should develop like a scout program or early stage sort of fund? Or did you just want to maintain fund discipline and just play in the space you're in?
It's a great question, Eche, because what comes to mind when you ask that question is that why adopt a multi-strategy approach? And my answer is yes, you should, but you have to choose the strategies. So if you look at the strategies we've chosen 3 now, and I'll then come and answer the venture question. We've chosen strategies that, in addition to our global fund or our generalist fund that sort of can do multi-sectors, we've picked a couple of sectors that we think can support, like the deal flow is the energy. So we have an energy fund we're doing in partnership with somebody else. We're also doing a private debt fund, right? Because private debt there's sufficient need and sufficient appetite by the investors as well. Because this thing, remember, we're an intermediary in a sense. We're basically market makers, even though you do it in a very proactive and active and hands-on way. But you have to have investors, and you have to have investments, and you have to have managers. That's the ecosystem. And we basically are in the middle of that ecosystem. So part of the research we do, just like you do your research, is to see where is the interest? Where do people want to deploy capital? And then where is the interest in terms of people needing capital? So these are areas where we see that. I think the venture space is another one. However, you also have to evaluate the supply, right? There are many players there, right? We have had people ask us to take them under our wings, and we've discussed some of them. Some of them we like a lot, and we probably will still do it. But I love partnerships. I'd rather partner with them. So we do partner with them. I mentioned Dr. Johnson, for instance. I partnered with her on a university, Nigerian University of Technology and Management. Not yet on her, I think her fund is called TLCom. Not yet on the venture side, but we've sort of talked about sort of them selling some of their businesses to us. Because like I said, we're at the next stage in that value chain, right? Yeah. So there are many ways, to build the ecosystem. Would Capital Alliance as a platform consider having a venture player or some, pocket for doing earlier stage things at some point. It depends on the who. If we have people and they fit into our space, yes, because we do believe in a multi-strategy approach, but we don't believe in strategy drift. I don't think there can be too many. And I think each one must have the kind of depth and leadership that he can stand on his own. You're just providing the platform. That's what you see again from the models elsewhere. Like I said, water doesn't run uphill here. We're learning from those who've gone before us. And in many respects, we are followers. When I was at Goldman Sachs, they used to say that long-term greedy. And what they meant by that is that they didn't really necessarily want to be the first in, but they wanted to stay when they got there. When they got to China, they stayed. And they took the time to do something well, but when they do it for the long haul. I subscribe to that strategy.
One of my friends who used to be at ACA, he always says this quote that in Nigeria, you will see a pain point and you say, how come nobody has solved this pain point? And then you rush in because you want to go and be the first to solve it, only to enter the field and your leg starts hitting all the dead bodies of the people who saw the pain points and are now dead. And now you're now there trying to solve it. And so it just speaks to me about how tough the environment is and why maybe the view an ACA has is like 150,000 like skyline view, and some people might still be in the 10,000 feet view, and you need to be able to connect those dots for them to say to them like, look, we're here for the long term and we're here to persevere throughout the peaks and lows, which brings me to my next question.
Please.
Currency devaluation has almost destroyed African PE returns systematically. Naira crashed from 430 to $1 to about 1,700 per dollar recently. A lot of portfolio companies earn local currency but service hard currency debt to LPs. How today do you structure deals to be currency neutral? And is local currency PE even viable at institutional scale?
Eche, that's an excellent question, but I'll start with a philosophical answer. Every market, certainly every emerging market, but I will even say every market, it's just that you have to go further back in history, has had to deal with economic crisis, currency crisis, and then in coming out of it, they've become more robust, more resilient, and better economies. People forget the Asian crisis. People forget the Brazilian crisis, the Argentina crisis, and so on. So my sense is that the first point, which is a philosophical one, is that like, we shouldn't act as if like something that has never happened before happened in Nigeria. Because part of this challenge is this Nigerian exceptionalism. Wisdom comes from learning from others. In fact, I'm told it's either a Welsh or a Scottish proverb that says, experience is the best teacher for a fool. Non-fools learn from other people's experience. And this currency thing, am I happy to have seen a crisis? Not necessarily. But do I want to learn from it maximally? Absolutely. So the first thing is that like, it was certainly a learning moment or a learning situation, right? That came upon us. Nobody expected, because when we modeled, Marx, you say 10% depreciation a year or maybe 15 if you want it to be overly aggressive. But this is now strong double digits. Certainly in the last 5 years, it's over 20% devaluation per year on a compound annual growth rate basis for Nigeria. But I do believe that what the government has done by pursuing an orthodox, meaning a market-oriented set of economic policies, will ultimately be vindicated, right? And I have a lot of respect for Cardoso, right? For Yemi Cardoso, the central bank governor, who has held his ground, and we can see that you said 1,700 is now down to 1,500 plus. Yeah. And it's part of that whole market overreact, then they settle, then they come back. Now in terms of what it means for risk management and currency management, several things. And I have to say that our last fund, because this already started, as you know, from about 10 years ago, demonstrated all the 3 points I'm going to make to you now. One is that like, it's good to have diversification. The general principle about risk, and I know this is not an academic setting, but the magic word when risk comes is diversification. That is the word that is the antidote to risk. At least that's what economic experts and analysts tell us. And they have a point. So diversification is key. And that's what we did with our last fund. Our last fund has 10 portfolio companies. That's fund 4. 3 are Pan-African, 3 are sort of West African, and 4 were sort of mainly in Nigeria. Of the 4 in Nigeria, 2 were energy companies, export earning. So that's what I call a natural hedge, right? In all those things, the currencies were diversified. or the revenues were diversified. So what it means that fund, has been quite resilient, right, in his returns. It's done better in Naira if you go and compute it in Naira, but then it's also done well in dollars. That's number one. Number two is specific action you can take. Now, currency hedges are very difficult in Africa, apart from maybe South Africa to some degree, but even then, you can buy some, swaps, features and all that because the currency and the financial markets are well developed. Not so in Nigeria per se. But Nigeria also had, some products you could buy, even if it's for only a limited period. One of the ideas we tried was what we call a synthetic hedge, which is where you could borrow in dollars. Sorry, you could lend in dollars. So you have your dollars. You lend it to somebody, right? And be getting dollar returns. Borrow in Naira, be paying interest in Naira. And then when you're exiting, you match the two. That's what swaps do, as you know.
Yeah.
It's not that you have to do it for yourself, right? And you can do it for a limited period. So some of that synthetic hedge you can do. And then ultimately, you can also work with financial institutions. I'll give you an example. You talked about borrowing in dollars. There are many institutions, including the IFC, private sector arm of the World Bank, that are prepared to lend to people in Naira for long-term projects. There's another company called Shelter Afrique that was also lending in Naira. Other people like AFDB, Afrexim, and of course, local banks lend in Naira as well. So you can also match currencies. There's something called matching, right, in accounting, the principle of matching. And it also applies to risk management. That's where you match your cash flows. Your cash flows are in Naira, you borrow in Naira. Your cash flows are in dollars, you borrow in dollars. So all that we've tried, but I don't want to overcomplicate this, but it is clearly something to plan for and to solve for. It's not something to ignore. Yes.
And actually, I want to talk about this other thing that you set up during your time as minister, the Special Economic Zone Initiative, right? Mm-hmm. And how it attracted billions of dollars. So I'm curious, number one, what made you set that up? What did you see? And what are the industries are thriving in these economic zones?
Great question. So the vision when I got to government, because one of the things I learned from going to government, and this is also my piece of advice to those who want to do public service or other things, it's always good to listen and to find out how you can add value, not just go with your own dream and say, this is my agenda, I'm going to implement it, because that leads to a lot of interruptions. Everybody comes with their own agenda. So the first thing to say, and it is credit to the government and to even the government before, by the way, was that the whole idea of industrialization and industrial infrastructure had been there. So, in fact, we had something called NIRP, Nigeria Industrial Revolution Plan, which was done by the previous government, the Jonathan government, with McKinsey. Great reports, great strategy, but it wasn't implemented. So one of the things I wanted to do, and I thought my experience could help the government do, was implementation. Now, when you got to implementation, it became immediately obvious that the real missing piece was industrial infrastructure. So I brought McKinsey back to work with me to create industrial infrastructure. The signature development or program or policy or sort of initiative under that was the special economic zones. Now, we went and looked at other markets like China. I remember we got a top China expert, policy expert, to advise us, because one of the things that has helped China under this new dispensation that they've done very well in terms of being the global manufacturing center of the world is just the economic industrial infrastructure they built out. Just to lower the cost of manufacturing drastically, hugely. We wanted to do that. Because if you can do that, which will include lowering the cost of power, lowering the cost of, once you're inside that infrastructure, things are easy, and then having a way to export at least, you could be competitive. And people are prepared to make the investment, right? That's what you talked about. So most of the big multilaterals and development finance institutions, African Development Bank, Afrexim, Nigerian Sovereign Wealth Fund, Bank of Industry, IFC, you name it, we are prepared to back us, and we are prepared to give us billions of dollars, like you said. So what I wanted to do was to use the government convening power, the agency of government, the capacity of government to create the enabling environment, the enabling conditions for special economic zones to take place. I wasn't able to complete that project, unfortunately, because the vested interest in government, once we also decided to put in a bit of money ourselves. Once we had an allocation, the way everybody woke up fighting for this allocation, say this money cannot leave this government over our dead bodies. It was tough. If you go and follow my ministerial career, you find that there was a time when the National Assembly started to question, query these special economic zones. They say, what are special purpose vehicles, SPVs? What are they? Why are you setting them up? Who are these people? All of it was to slow things down. And to their credit, I spent only 4 years and I had to leave because I had to come back to the private sector. So one of the things to be careful, and I tell people is that like, just whatever you're doing, do it in a way that it can survive you, because these guys have a way of waiting it out. They will try to outlast you. Soldier go, soldier come, as they say. So it's a great program, and it's still something that is sorely needed for Nigeria and for Africa even today.
But now that you say that, are there things from a manufacturing perspective that can be unlocked for the private sector? Because I see so many amazing businesses. Like I always talk about fashion and textiles and things like that. And I feel like they're not fully unlocked because we don't have this manufacturing infrastructure in place.
Yes, I think the key is to think of it not so much as either or, as collaborative. The private sector is key. And if you look at even cases where the private sector has undertaken big projects, whether it's Dangote trying to do a big refinery, or what they did in cement, or what people did in Emole petrochemicals, these were all previously government initiatives. Private sector came in, right, and they unlocked the potential. And it can be done systematically. Telecoms that we talked about, Texas was incidentally one, and we wanted the private sector. That's why I say it should be collaborative, to be the ones that will actually roll out the things. So we're going to attract the Chinese and even people from Asia, from Europe, and also from here. So I think it's to encourage the private sector to do it, but it will even be better if the government can provide the enabling environment, right? Those things, whether it's enabling legislation, maybe giving them tax incentives, which is what these special economic zones do. Certainly making sure that are not caught in the bureaucracy and the roadblocks internally, but if you want them to compete externally, then give them like if you're taking people to the Olympics, you know what I mean? You train them and you remove all these wahalas, we call it in Nigeria, so they can go there and compete. If not, you find that they'll be hobbled and you can't compete because other countries are creating enabling conditions for their people to be competitive. Why do you want to hobble and frustrate your own athletes, your own players, be they, industrialists, private sector players? This is the mindset shift we need, that we are competing with the rest of the world. Like they say, Nigeria know they carry last. So you have to help them. Look at how happy they are with our female, footballers and all these basketball teams. We enjoy it when they come back. But the key is create the environment, because Nigerians are competitive. My mentor, Kramer, an American who lived here for several years, used to say that when you send Nigerians abroad, they compete well, they do very well. How come Nigeria as a country struggles and Nigerians struggle here? He says it's the system, not the Nigerians. Nigerians are okay, very capable, full of initiative, very enterprising. Give them the conditions to thrive. In that respect, we are our own worst enemies. But I believe it can be solved. This was, by the way, the message I carried to government. If you go and check my policy, the signature policy was enabling environment, just basically creating enabling conditions for the private sector to thrive, for investors to come, for businesses to be built. And it's a no-brainer. If you don't have a vested interest in trying to benefit from people coming to you and calling you honorable minister and calling your phone all the time, free up the place for them to do business. And everybody will win. The government will be happy. They'll be happy. That's my philosophy.
Are there any incentives to help push some of these initiatives forward in the sense of special economic zones? These are things that have already been modeled in China. You can hear about the different Chinese cities that came up as a result of that. I'm pretty sure, like in government, so many people might not necessarily know about what had happened in China, but the interests are still vested, right? So is it a thing where, and I'm just asking because I don't know, where, hey, maybe each part of the country gets one special economic zone so that everyone's satisfied? Or is it even much more vested than that? That's not like a regional thing. It's much more, there are other interests that are saying like, look, I want one, or 100 people want special economic zones type of thing. Like, what were the nuances within that?
The first thing I would say is that that vision should go all the way to the top, right? I thought, for instance, that President Buhari, who was the president at the time I was there, caught the vision because he liked the Chinese a lot. And this man, we brought him and he presented to him and he bought into it. And I went to China with him. We took pictures with all the way to the top of government and private sector. But what tends to happen is that there are other interests as well. when the people in the National Assembly, the people in the parastatals, all those agencies came and started talking to him to say this thing, is going to disrupt how we, maybe make money or how we have patronage for politics or whatever, right? I would say that like, I've discovered that like the vision was not as well understood or that we're not prepared, to make the changes that were necessary, because some of the people around the president basically, managed to, if you will, get his attention in a way that if that support had stayed at the level it was at when we started, we could have carried it through. That then leads me to the point that like, even in the current government, one of the things about a President Tinubu who is from the private sector, you would hope that he will understand that and put his weight behind it. Somebody told me, for instance, that in the oil sector, that he's very much behind the reforms there and the new management in NNPC, despite all the noise that is going on, that like he's still focused on wanting to see major reforms there. The gentleman they put in charge of OPEC, for instance, who's the chairman of OPEC, is a gentleman I know well, first class energy specialist. So it's basically playing our A team. I call it the Olympic mindset. You know what I mean? You are going to the Olympics.
For gold.
So you're going for gold. Bring out your best. If you bring out our best, Nigeria will surprise the world. I'm telling you.
It's true. And actually I wanted to switch gears because I think about our audience and a lot of them are in the diaspora and quite a number of them in our comments have specifically said, I want to invest, right? And so if they had $100K to $1 million to deploy, and I know that's a big range, what would you think is the smartest entry?
I'll give them investing is my thing. So first of all, you are talking to the right person when it comes to investing. That's what I've done for the last maybe 30 something years. The first thing about investing is, requires, I think it's good to look at it like a specialized thing, right? That is not just common sense because a lot of the wisdom in investing can be counterintuitive. Therefore, step one is who are your advisors? And I don't mean it in a very sort of narrow sense. It just means that like where you get your advice, your wisdom from matters a lot when it comes to investing. It's just like medicine, right? I mean, if somebody is sick or somebody wants to get medical advice, where he's getting that advice from is very important. The same thing is true of investing. Even myself, even as I've been investing for 30 years, I am a private equity investor. I have a portfolio, for instance, for public equity. It's managed by experts. So I focus on choosing who will manage the portfolio for me. Some people speak their own stocks, don't get me wrong. But I'm very big on getting the right advice, right? Not necessarily, at a costly or whatever, but just be careful to make sure you get good advice. The same thing is true about if you want to invest here. So the way to think about investment is that I always tell people, so think about it as a portfolio, right? I won't put all my money. If I'm living in the US in diaspora, I'll certainly think about my total, like investment portfolio. I'll take a piece of it and say, okay, I want to invest in Nigeria or in Africa. I'll then decide, how much of it I want to get what we call alpha return. That means you want strong return on, which means you are prepared to go into ventures or private equity or maybe back a business that a friend is doing or something. Versus I want to, get some of the upside from these markets. Whether it's bonds, Euro bonds here, can earn you north of 10%, which is considered good double digits, or stock markets, or even what they call carry trade, where you are basically investing in treasuries here because you believe that the market has overcompensated for depreciation. So interest rates here are 20-something%. Interest rates in the US are 5% or less. Therefore, you can get a carry of 17% spread, right? But you're taking a view on the currency, that the currency will depreciate by under 17%. In other words, you won't go from, say, 1,500 to 2,500 between now and next year. And because elections are coming, probably won't, right? But again, that's a risk. That's a bet. So I think figuring out where you want to invest is important, and then who you invest with, right? Whether it's 100K or $1 million or 10K, right? But I would say, get the right person. That's why, and Nigeria is maturing in that respect, meaning there are professional advisors in each of those spaces. If you want to do ventures, there are people who can advise you, or even ventures you can talk to. If you want to do private equity, we're there. They can talk to us. If you want to do public markets, you have all these Stanbic and, other people who invest in public securities.
And actually, just out of curiosity, because you were talking about different sectors, what about media? And the reason why I'm curious about that is I was having a conversation with one of my mentors right here in Banana. We were walking, and I remember asking her about like broadcasting and media, and she was like, "It's a tricky like sector to invest in." Do you have any thoughts around that?
So I think you have to situate media as what it is. If you're investing in media today, even if there's any that is listed, I don't think there are many. So it's probably going to be a private investment. So the first point is that like, this is private capital. So you're already in a sophisticated investment area, right? If you're investing for passion, then it means that like, you are prepared to lose the money, right? This is your passion. And therefore the amount should be an amount you can lose. Not all about media. This is just speaking professionally about how to think about an investment, right? Because the vehicle you're going to pass through is what defines the risk. So even though the sector is media, the pathway is private investment. Someone might decide to back Afropolitan, right? Afropolitan. I want to make sure I called it right? But then when you're doing that, you're backing the people. So that means you're backing Eche and Chika. And let me tell you a story to support that in a good way, in a positive way. Warren Buffett, who is considered the world's arguably greatest investor, one of the best, certainly in the last 100 years, came to address us when I was in business school. And people asked him, how do you know what to invest in? He gave us a clue or a tip. He said, if you can pick the right people to back, you will make a good investor. Because people and investments or stocks are a lot similar. So somebody who can decide, I'm going to back Eche and Chika and get it right. Remember that there are hundreds of Eches and Chika. In other words, there are different people doing the kind of things you're doing. But there are some people who are gold right in there. And you guys might be the gold. If somebody who can spot that is a good investor. And that could be the media play. Usually when you do that, you make money. I have done that a few times. And I've really lost money, but I don't do it often. There are times when people are compelling. That takes me to another principle that I learned from another great Harvard professor. He says if people act with conviction, you know what I mean, on the things that are certain about, every once in a while you're certain about something, you know. That's the time to make a bet. There are times you see this, you know that these guys, I'll give you an example. When Warren Buffett said this to us, I had a classmate, I love the guy. He was my friend, a Canadian guy. But I said, if only one person does well in this class, it will be this guy. This guy is the CEO of one of the biggest banks in Canada today. And I'm still betting he'll be Prime Minister of Canada. But even then, you could tell that this was a star, right? There's just something about his intellect, his relationships, his goodwill, even his faith. I remember the guy said to me once, it's okay. I always ask myself, what will Christ do? And if you see, the guy is a Catholic. I'm more Pentecostal, spiritual and all that. But this guy said to me, when I look at my values, I say, what would Christ do if he was here? I say, wow, what a man that has character, So I'm just trying to say that like, even in media, it's possible to pick people that you want to back, but you're backing them because you believe in what they're doing. So I'll look at it like I decided to, partner with or back, Afropolitan or something, something you believe in. And therefore, and it helps when it's a cause as well. Yeah.
And actually, I want to even speak more about even mentorship because you talk a lot about it. But I feel that some people still don't understand, how do I get a mentor? And I know in Nigeria, it tends to be, they'll send me a DM, they say, I want you to mentor me. And I'm like, I don't know you from anywhere. How do you want me to mentor you? So how do you do it in a practical sense? Especially if there's someone you see, like, I want them to mentor me. How do you do it?
It's an excellent question. And we're in the age of social media. So I'm going to divide it into traditional, which is what I believe in, as in like I believe in the principles that are time tested. Then we can then overlay on it what might be different because of the dynamics of society today. And you caught the point. I think the starting point is that like a mentorship is a relationship. So relationships have to have a basis. How did you meet? Where did you meet? What impression did you make on the person? The greatest mentors I have had are people I interacted with at one level or the other, right? But they represented the gold standard. They represented something I aspired to. But I also tried to impress them by being a good student or being good at what I did. Let me tell you a story to illustrate this. The Kramer, who I say became my mentor, he wasn't always my mentor. Let me tell you what happened. I left medicine, joined Arthur Andersen to work there, and I got off to a flying start. I got it to a very good start. And I probably didn't handle it too well because I got there, and I found that accounting came naturally to me. I used to be good in maths and hard maths and all that when I was in secondary school. But then I went medicine. Medicine, is biology, chemistry. I was going to say physiology and anatomy and so on. So I went, but when I got to accounting, all my maths and accounting, they call them bean counters, came back. So I settled in fairly quickly. By the time I did the ICANN exam, I had won a national prize. So, I was floating a bit. I started feeling like quite cool with myself. And I remember at the time, actually, even myself, I could tell that, okay, you need to calm down. You know what I mean? And so when that was happening, it started to affect my relation with my bosses and my colleagues at work. So they were concerned about me. But then I started going to church. So I started to pray that I wanted to be, humble. I wanted to be patient. I wanted to, be better with my colleagues. I tell people that the way God humbles people. I did the next exam. The course I thought I was best at, cost accounting, I failed the course. I got a reference. And that reference sobered me up. So when I went back to Arthur Anderson, I was very sober. You know what? Nobody told me to be humble. But I just failed an exam that people were expecting me to come back with a prize. I was supposed to be Olympic, gold medal is like you fell, right? Instead of getting the medal. So you come back, you're humbled. But then he also did something else for me, for which I'm very thankful to God. I was planning to be, then all these banks were being launched and I was getting lots of offers because I was sort of already visible. So I was thinking I'll take a high profile thing and decide one next. But after that, I said, okay, who even told you that you can just plan that far ahead? Why don't you pass this exam and get this done? So I said, why don't I even do something different? That's when I decided I was going to go to Harvard Business School or an MBA in a top school. I'm not going to pursue the regular career path. But the pathway passed through Dick. So while I was that sober, I then went to see him. By the way, somebody had counseled me before I went to see him, which is another story, but I know our time is fast spent, so I won't tell you that story unless I need to. So by the time I went to see him, right, I was sober. And these people are so wise and they have a radar on everybody. So when Dick saw me, he said, he used to call me Okey. My name is spelled Okey. Even though it's called Okey in Nigeria, the white man or the American called me Okey, like key with an O in front, Okey. He said, Okey, you sound much more mellow and mature. You've grown a lot. I said yes, that I'm, being mentored, I'm being coached by the people. And by the way, I would like him to coach me. And I told him what my plans were, and he initially questioned them. But eventually, when I shared some of the wisdom I got from another mentor, he's no longer with us, Dr. Gilbert Uzodike. He used to run something called Critics and Art Switch. Great Igbo man who has also passed away. He went to Harvard Business School as well. He's the one that told me what to tell Dick. And when I shared that wisdom with Dick said, okay, you've given this a lot of thought. I will mentor you. So there's a pathway to mentorship. That's what I'm saying. At a stage, Dick told me to look at Warren Buffett as a mentor because he was the best at what we did, but he's very far away. In that case, it's a different ballgame. What you're really saying is that you will study the man. Yeah. Not that you take up his time, but you study his writings, you study his videos like we're doing interviews and everything. You can be mentored remotely that way also. Look at Jesus Christ. I mentioned my friend said, what would Jesus do? He has to study the ministry of Jesus if he wants to be mentored or discipled by Jesus.
I love it. So, Uncle, artificial intelligence is a huge thing now in both abroad and even domestically as well. Does ACA have a thesis around artificial intelligence? And are you guys deciding to play maybe on an app layer or, like you mentioned, data center layer as well? Is there a fundamental thesis that ACA has around the role artificial intelligence is going to play for our future?
It's an excellent question because I consider it a rhetorical question. Yeah. The other way you could have asked me that question, that everybody has to have an AI strategy. What is your own?
Yes. Yes.
And I like that question because it's something we're mulling. I'll be very honest. I have a friend, I'll tell you, I have a friend who went to Government College Roma, had the same school I went with your dad. And, this guy, he used to be a banker. I think he studied zoology in school, like one of these botany, biological sciences. Did banking in fairness. Then he went to Oxford. His name is Sonny Eche. You may have heard of him. Sonny went to do some special program at Oxford on artificial intelligence, and he's been gung-ho on it. So that inspires me a lot. It's like Sonny, if he could be someone who studied zoology, did a bit of banking, could be an expert on artificial intelligence. I must have my own AI strategy as a person and also ACA as a firm. But you touch on something very important. The way we work in ACA is we are best as an enabler. So we would like to provide the infrastructure that helps artificial intelligence. And we're already doing that. If you look at this investment in WIOC, we call it a digital infrastructure play. It provides the data centers, it provides the bandwidth, It provides a connectivity, undersea cables and all, that on which these things ride, because they consume a lot of power and a lot of capacity, right? And you make money doing that, right? So we would like to, from an investment thesis standpoint, to be catalytic, to provide some of the, resources or things that are needed that will enable artificial intelligence on a continent. Now, from a people perspective, I'm part of NUTM, Nigerian University of Technology and Management. It's a STEM university, science, technology, engineering, and maths university, and management. And AI has an AI strategy as well. And there, I like to think, since I'm a founder of the university, that I'm also playing a role in basically making sure that we're AI trained, AI ready, and AI equipped for the future. And then the final thing I would say, as a person, I really want to grow by reading. I never want to stop learning. So I like to take an AI course. I don't know when or how, but I use Sonny Ireche as an example, who went there. I'm not sure I can go for a year, but I certainly can go for a couple of weeks, right? And then keep reading on it. We're planning to get people to talk to us in African Capital Alliance, just because there's a lot of, firms and knowledge experts that can educate you on AI and help guide you through the journey. That's what we plan to do.
Definitely. So African stock markets remain illiquid for PE exits, right? Are you seeing innovation in exit strategies, whether it's secondaries markets, cross-listings, strategic buyers from other African markets?
Exits are, remain a very important, crucial subject on sort of private equity generally, because even right now, globally, there's a bit of a hangover, right? And more so in Africa. Yeah. If you ask people, they'll tell you something, a technical term we use, we call it DPI. That's the amount of distribution, let's say percentage of the capital somebody invested. Because the way a private equity fund works is, I'm raising $100 million fund, you decide to put in $1 million. I don't take it at once. I probably call it a commitment fund over, say, 3 years. And then I start returning it. That return is called distributions to you. That return as a percentage of how much money you gave me is called DPI, distribution as a percentage of invested capital. Now, that's something people are monitoring, and they're saying that number is still depressed in Africa and even all over the world. And the key to unlocking it is liquidity and exit. So exit is key. Now, the generic ways you exit, or the pathways, the general ways you exit is clear. It's basically, number one, strategic and trade buyers. Because these businesses, if you are backing winners, people tend to want to buy them. It's basically financial exits, of which stock markets could be key. In developed markets, it's probably number one. In our markets, less so, like you said. And then it's also through this financial engineering, leverage buyouts, borrowings, and so on. You could also talk about, sort of financial buyers like other private equity firms, which is also very big in other markets, which is why you need an industry, an ecosystem. Because we build something, you sell it, somebody else buys. And we've experienced all those exits over our 25, 27-year history as African Capital Alliance. The challenge is that they come in cycles. So if you look at right now, we're doing 2 big exits on stock markets. One in the Botswana Stock Exchange, Continental Reinsurance, and another one, Aradel, which we listed in Nigerian Stock Exchange last year. And they're both going very well. But it's because the markets have bounced back in the last, that's why I told you the prognosis is good. If you go and look at the last 5 years, could you have done that? Less so. And when it comes to trade buyers, that's where the macro thing comes in. So the key is that you prepare for the exit before you go in. In fact, like you asked me earlier, which was a very intelligent question, why I said you know the industry well. You have to start with, can I exit this business? The reason why you said $50 million investments are rare. If you make a $50 million investment, trying to get 3 times, you have to find somebody who can pay you $150 million. If there's nobody who will pay you $150 million, there's no point in paying 50 because you already locked yourself into something where there is no exit, right? So there are sectors where somebody can pay $150 million. There are sectors where it can be a unicorn. But remember that for every unicorn, there are 100 attempted unicorns that failed, right? So you also have to ask yourself, am I making a bet, that what I'm backing is a unicorn? I'll give you another proverb from the Bible. A certain Israelite king, as they were called at the time, said, a man going to battle does not boast like somebody returning from battle. So you don't act as if you are sure something is going to happen in the future when it hasn't happened. There has to be some caution there. So I think the wisdom I'll leave us with, or the thinking I'll leave us with, is there's a lot of planning and scenario management when it comes to exit. You have to have 2 or 3 scenarios, all of which are viable, and then you apply the one that is most relevant at the time.
So reflecting on ACA's journey, right, from Fund 1, spectacular returns, to later fund challenges in tougher economy, what key lessons have you learned? If starting ACA from scratch today, what would you do differently?
Let me start from where you stopped and then come back to the lessons and takeaways and wisdom we've acquired, as I like to think of it. They say life is as much about return on luck as it is about your effort and wisdom and all the other things. And I tend to believe that. So the first point to make is that everybody should make the most of the chances and the luck and the hand life will deal you. Eche was a hand life dealt me. The Kramer is no longer here, right? But he was my mentor. You know what I mean? So if I had missed that opportunity, I think it would be a big glip to say I can just come and start a CA today because I have to reproduce under the Kramer, Shonekon, Pascal Dozie, all of whom have gone, right? I like to quote the Bible, not just to be religious, but because there's a lot of wisdom in it.
Yes.
You know, Christ himself said in the Bible, walk while it is day. The night is coming when no man can walk. And then he went on to say, as long as I'm in the world, I am the light of the world. So in other words, he said, I came to do work here. And that's why we're still talking about him 2,000 years later. You know, so one of the things, because I know people will be listening to this, I don't want to give the impression, I can get up anytime, do what I did with ACA. It was literally a gift. I have a mentor that says, okay, life is a gift, take it. It was given to me. I thank God I grabbed it with both hands. If you come to my office and I welcome, Chika and Eche to my office, the Kramer and Wanda, the wife's pictures are there because they were the bridge God used to, create the opportunity for me. So the first thing to say is that you will get your ACA moment. Please don't squander it and think it comes every year, every second. It doesn't work like that. That's number one. That's why I wanted to start with that. Now, having said that, the lessons are the following. One, cycles do happen. When things are going very well, don't believe your own sort of
hype.
Your own hype. Because I have to tell you, there's a talk I gave at the Africa Business Club of Harvard Business School in 2014. It's on YouTube. You can go and listen to it. All these questions they asked me, and I consider those guys are very smart too. Those questions turned out to be prophetic. And I'm sure Eche, you'll be prophetic again. And if my answers are too glib, may God help me. And why do I say so? Because the things that were coming, as if they knew what the next 10 years would be like. They asked me about exits. They asked me how you cope with Africa and illiquidity. I mean, the same very wise questions you're asking today. And I gave answers I thought were well thought out answers. But when I look at what came after, I wish I had even done more research and be more cautious and more careful, right? What am I saying? What you will find is that good turns will come and bad turns will come. The key is to have a robust approach to life, right? You survive to thrive. You have to have that staying power. So you never really bet the farm. That's number one. And then number two, you have to ask yourself, do I have contingency? Do I have options? Your option cannot be I must list this market because the stock market can be depressed and it can shut down. But if you have a business where particularly cash flows, which is why I like where I am, can enable you at least to get the returns from the cash while you're waiting to sell the business at the end. That's better versus one where you get one shot at it when you can sell. Because one of the enemies of returns is time. The internal rate of return, the way it's calculated is time weighted. So if you don't do it in time, even if you get a good multiple, what we call multiple on invested capital, you still find that your IRR will be low, which is one of the problems in Africa because the things have taken time. And therefore, the internal rate of return is not as good as it would have been if the exits happened more quickly. So I guess what I'm saying in effect is that if I had to do it again, I would diversify more, like I said. I would have started my African diversification earlier. We did in Fund 4. We should have done it earlier. Number two, I would certainly invest in things that have scale. I'm very nervous about smallish businesses. They tend to get squeezed in tight markets. Now, if you're a venture capitalist, you have a strategy for it. I'm not. So I need to be more careful about investing in things that are fragile. We backed some businesses that were almost like the way ABC looked. ABC was successful, but if you go and look at when we did ABC in the 2000s, it was a stable market. We backed Film House. Film House like an ABC. I like the guys who did it, but it was a tougher call because they came in the last 10 years, right? And I can give you other examples. So the bottom line is that macro does matter. And therefore, the business should have coping capacity as well. And then the final thing I would say is that in addition to geographic and currency diversification we talked about, the sectors also matter, like you said. You have to pick sectors that are winners and then pick winners within those winning sectors as well.
And do you see a $10 billion private equity fund in Africa?
It's like saying, do you see Africa achieving scale, right? The answer is yes. They say everything is timing, right? If you believe the economists who tell you that Nigeria will be like in the top 10, I think top 7 or top 5 in terms of population 20, 30 years today. And then mark some other countries in Africa. In fact, I think like 4 or 5 countries in Africa. Ethiopia is another one and so on. Then inevitably scale is coming. And that $10 billion fund we situated within that. So that's one dimension. The other dimension is where Africa is basically what you're using, right, to reach the world. There's a company called Actis. Actis was a spin-off from the British Commonwealth Development Corporation Fund, which is now called BII, British Investment Industry or something, BII, British International Investment, right? Something like that. It used to be called CDC. Then the management team within it spun off as Actis. Actis is now a global sort of private equity firm that is part of another group, another global group. And they manage, close to $10 billion. But then it's not just Africa. It's emerging markets. And we want to get to that 10 billion over the next 10 years. So the strategy that will do that, we have to create it both within Africa, but also make Africa part of a global ecosystem, in my view.
Okay. So we're now going to switch to rapid fire questions. So just whatever comes top of your mind. So my first question is, what is the book that shaped your thinking?
2 books, 7 Habits of Highly Effective People, and the Bible. To the extent that the Bible is a book, because it's a book of wisdom. I love it.
Okay. And what is your favorite Nigerian food?
My favorite Nigerian food is, when I was growing up, rice and beans, right? Breadfruit. Those were the 2 delicacies my grandmother used to cook for me.
And then best decision you made in your 20s?
The best thing I made in my 20s was to switch from medicine to business. Early 20s.
Okay. I like that. What's the most underrated opportunity nobody's talking about?
I think for me, it has to be basically the next big thing that is going to happen, like African Capital Alliance, right? Just the same way I think there's another African Capital Alliance coming up. I think somebody should spot it and go for it. Just the same way Dick Kramer backs me. I think there's just so much in this young population that I think we need to. Atedo Peter side, I know it's longer than the answer you wanted, but Atedo Peter side used to say that when we were growing up in the 80s and early 90s, how come a lot of, and even up to 2000, a lot of business, IBTC was created by him, GT was created by Fola Adeola and Tai Adenuruku. We created African Capital Alliance, Dejali created ARM. I'm sure more of them are happening, but you just want to see those iconic businesses come through again. And I think they're there. Yeah, I think they're there.
I like that. And you've traveled all across Africa. What's your favorite country to travel to in Africa?
In Africa for holidays, Mauritius, because it was where I went for my honeymoon. For business, I like Morocco because I just like the way they have just integrated with, they're having their cake and eating it, right? They almost behave as if they're part of Europe where it suits them, a part of Africa where it suits them, and part of North Africa where it suits them. In fact, I even claim to be part of West Africa. Morocco, go and check. ECOWAS, really? You see them hanging in there as well. Very clever.
Oh, I love that. And then the last question we ask every single guest on this podcast is, who do you want to see in that chair on the Afropolitan podcast? Whose story do you think needs to be told?
I'll give you a couple.
Please.
In terms of women, I like Omobola Johnson a lot. If you haven't had one,
I connected to her, so
yeah, yes, I think she's a great. She's understated, but she really packs a punch. Yeah. Frank Neji also that you mentioned, right? If you haven't known Frank, do Frank. Frank is a brilliant entrepreneur. I just love him. Yeah.
Okay. Well, thank you so much. Okay,
sorry, I had one more question. Just one. Okay. Uncle, so I think while doing research, I think one of the partners you started ACA with also passed within the last 10 years. I wanted to know, how does that change the dynamic of the firm when this is a person you start a business with? Like you said, partnerships and relationships matter. And I wanted to just talk about his legacy and how his legacy also helped shape the firm coming up as well.
And that's the Kramer, right, that I'd like to talk about. So the first thing is that your question is excellent because it actually illustrates the genius that this man was, right, and is. If you want to talk about him in the contemporary, in the present. When we're starting ACA, he believes that you build things to last. So ACA was set up the same way Arthur Andersen was set up. So the firm was built with the clear understanding that it will pass from one generation to the next, including how people exit and how they come in, how the partners join the firm, how partners exit the firm. And we've gone through 2 or 3 generations of partners that have passed through. Even when I went into government, I had a strategy that put my interest in a trust, right? I went, just like when he was coming back, I was the most appropriate person to take over from him as chairman. I didn't come back as CEO, I came back as chairman. So part of his legacy is this whole building businesses to last, with ACA as an example. His other legacy is investing in people. Dick believed in people. My view, by the way, is that because Dick trained over 1,000 professionals, most of whom are still in their prime, and I include myself in that lot. And we've talked about some others. Mobola Johnson, Dick used to call Dr. Johnson his daughter because he mentored her, right? And Dr. Johnson will tell you that if you bring her here, and honestly, those people, Dick used to call it unfinished business. We have to shape this country and shape this continent. So I think we are primed. Some of us have served a bit in government, like Dr. Johnson has been Minister of Technology, I've been Minister of Industry, Trade and Investment, but it's unfinished work, right? There is more we can contribute. There is more we should do to create the dynamo. I mean, just a very dynamic and a very successful country, continent, generation, economy, you name it, that we ought to be. Because the training we receive is first class, is world class, is Olympic standard. Not just because of the schools we attended, but the training inside Arthur Andersen, the mentoring, the relationships, the clients you served, the exposure you got. When I was there, I worked in Nigeria, I worked in the UK for them. They wanted me to return to the UK before I decided to join Tom Barry. And then Dick joined with us to start African Capital Alliance. So he has an incredible, amazing legacy.
Oh, man. Thank you so much, Uncle.
Thank you.
Thank you.
Thank you very much.